Good morning, my dear friends. So we are in the chapter internal reconstruction. We're almost at the end. Multiple concepts we discussed till now. Surrender of shares concept also done. A quick recap exclusively related to the surrender of shares before seeing problem number 10. So just I want to take one more problem for discussion. The problem belongs to RTP, which brought out from the latest RTP, but a lot of technicalities are involved. So that's why I want to take it for discussion. So right, come back to surrender of shares concept. Sir, in case of surrender of shares, the shareholders are voluntarily surrender their shares to the company. Is it allowable as per Companies Act 2013, which is actually against the provisions of Companies Act 2013? The only one exception is during the process of internal reconstruction, if court approval is there, then shareholders can voluntarily surrender their shares to the company. What is the accounting treatment we need to follow at the time of surrender of shares? Equity share capital should be cancelled and such shares should be put it under the account share surrender. But if you are observing at that point of time, we are not recognizing any profit. Really, once the shareholder surrender his shares to the company, profit is derived by the company. But company will not recognize such profit until utilization of such share surrender. That's why we will recognize the profit at the time of issue of shares by utilizing the share surrender to the various parties like creditors, debentures, or the preference shareholders or any other party. Am I right? Now, so we take in different cases for the purpose of explanation for better understanding. Now, the balance of creditors is 3 lakhs in issue number 1. So out of which 1 lakh is foregone by the creditors and the balance of 2 lakhs we are issuing equity shares for the remaining amounts full and final settlement. Now the real foregone creditors account are to reconstruction account. Now you are issuing equity shares out of the share surrender for the balance of 2 lakhs. Whenever you are utilizing the share surrender account, the entry is share surrender account are to equity share capital account and the creditors account are to reconstruction account. Now you are recognizing the profit. If you see, now you are recognizing the profit. Sir, rather than recording the 2 entries, that is creditors to reconstruction and again creditors to reconstruction, you can pass a single entry that creditors to reconstruction account 3 lakhs. That is also possible. Issue number 2, we seen, sir, out of 3 lakhs, 2 lakhs is the gross foregone amount, in consideration of which he is expecting 1 lakh worth of equity shares out of share surrender. For the remaining balance of 1 lakh, again they are expecting equity shares out of share surrender. This is for the remaining balance. Now first you need to check what is the net sacrifice here. Gross 2 lakhs, he is expecting 1 lakh means the net sacrifice is only 1 lakh. That is creditors to reconstruction is only 1 lakh. Now in whatever the situation you are issuing the equity shares, whenever you are utilizing the share surrender, the entry is same, share surrender account to reconstruction account. That is total 2 lakhs you made. Now, all of you please concentrate. You can cross check here. Sir, how much amount you are utilizing through share surrender, you can need to transfer to reconstruction account, right? That is creditors account data to reconstruction account. This is due to utilization of share surrender. This 1 lakh is due to real sacrifice made by the shareholders. Sorry, real sacrifice made by the creditors. So the total amount is 1 lakh plus 2 lakhs. This is the real sacrifice. This is for the purpose of utilization of share surrender. Just now you are recognizing the profit. Now hope you all understand the concept of share surrender. The only logic you need to observe here is, sir, at the time of making surrender of shares by the shareholders, we are not recognizing any profit. Such profit we are going to recognize at the time of issue of shares to such parties through share surrender. That is the only one additional and special point we learned in case of share surrender account. Okay, so we done one problem as well. Sir, after completion of share surrender, if any balance is appearing, it should be need to be transferred to reconstruction account. Still, in the reconstruction account, Any balance is there after making set off with P&L, that is as usual, you should need to transfer to capital reserve. That is the flow you need to adopt at the time of conducting problems. Sir, we will take the last problem for the discussion. Remaining problems you can complete from your end, guys. So clearly I given the printed solution for all the problems. You can please all of you check out the printed solutions if at all, if you are facing any issues at the time of resolving the problems. Now come to problem number 10. All of you please come to problem number 10. Friends, just a moment. I'll come to here. Just a moment. Please be all of you hold for 1 minute. Yeah, right. Now, problem number 10. The following is the balance sheet of Star Limited as on 31st March 2019. So if you observe under equity and liabilities, shareholders fund, share capital is given, which is 7% preference share capital of rupees 100 each, fully paid up. Amount is 9 lakhs. 10,000 equity shares of rupees 100 each, fully paid up. Amount is 10 lakhs. Both 7% preference shares and equity shares, both face value is 100 rupees. Reserves and surplus, under that profit and loss account is there, negative figure 2 lakhs. Non-current liabilities, two different types of debentures are exist. A-type debentures, that is 6% debentures. B-type debentures, also 6% debentures. For A-type 6% debentures, secured on Bombay Works. For B-type 6% debentures, secured on Chennai Works. Sir, what is this Bombay Works and Chennai Works? Maybe assets, guys. Bombay Works and Chennai Works are two different assets. While reading the assets information, we can easily understand what about this Bombay and Chennai Works. Current liabilities and provisions, Workman Compensation Fund, Bombay Works, Chennai Works separately given, which is a liability. Workman Compensation Fund means if any during the working hours, if any injuries are occurred to the workman, then as per the Workman Compensation Act, we need to compensate to such employees. Maybe disablement, maybe sometimes death. Such all things are going to occur. Okay. So for such things, Workman Compensation Fund liability is there for Bombay Works separately, Chennai Works separately given. Trade payable is also given. Assets, okay, this is PPE. Bombay Works and Chennai Works is nothing but property, plant and equipment. Maybe this is maybe related to a construction industry. So Bombay related property, plant and equipment and Chennai related property, plant and equipment separately given. You can call it as office building or other buildings, whatever the case may be. Investments for Workman Compensation Fund, 15,000. So if you observe here, the total Workman Compensation Fund liability is there na 15,000. So to compensate such liability, we just made outside investments. So whenever there is a possibility of making payment, we will realize the investment we will make to such parties. That is the objective of maintaining fund as well as investment. Fund is a liability, investment is an asset. Now coming to current assets, inventory is given 4,50,000, trade receivables given 2,50,000, cash at bank 50,000. A reconstruction scheme was prepared and duly approved. The salient features of the scheme were as follows. Paid up value of 7% preference shares to be reduced to 80. You know the existing face value is 100. 100 rupees, it is reduced to 80 rupees means 20 rupees is amount foregone by each and every preference shareholder. But the rate of dividend being raised to 9%. Now, earlier which is 7%, now the rate of dividend is raised to 9%. Can you please tell me, guys, all of you, what is the journal entry? What they require, let me check at the end. Then I will go to my OneNote, one by one entry. I will go to pass. I'm going to pass. Pass necessary journal entries in the books of Star Limited after the scheme has been carried into effect. So just they require the journal entries. So first, let me take up the first point for the discussion. Problem number 10. Existing 7% preference share capital. Face value is 100. I need to cancel. How much? In balance sheet, it is given 9 lakhs. 9 lakhs account data. To 9% preference share capital. So the paid up value and face value both are reduced to 80 rupees. 9 lakhs into 80% means, which is 7,20,000. The remaining amount will goes to reconstruction account. How much? 1,80,000. This is the impact of first entry. Next, paid up value of equity shares. If you observe here 7% dividend, now I converted to the 9% dividend. That is one thing happened, and another one 20 rupees is foregone. Next, coming to the second point, paid up value of equity shares to be reduced to 10 rupees. The existing paid up value is 100, which is reduced to 10 rupees means 90 rupees per share is foregone by the equity shareholders. Now, the total existing face value or the paid up value is 10 lakhs. Equity share capital account, let us first cancel. Equity share capital account data. Face value how much? 100 rupees. Amount is how much total? 10 lakhs. To equity share capital account. Now the face value is converted to 10 rupees. That is 1 lakh. The remaining amount you need to transfer to reconstruction account. How much? 9 lakhs. Am I right? So 90 rupees per share is foregone. That is 10,000 shares into 90 rupees, which is equal to 9 lakhs. Come below. The directors to refund 50,000 of the fees previously received by them. So directors in generally get directors fee, na? Maybe for the purpose of attending the board meetings, company will pay certain fees to the directors. Such fees are repaying by the directors to the company during the process of internal reconstruction. Sir, whenever they are repaying, which is a profitable situation to me, whenever you are getting a profit, the entry is bank account data to reconstruction account. So whenever they are make it refund, so which is a cash inflow, bank account data to reconstruction account. Am I right, guys? In generally, you need to make it credit to P&L, but during the process of internal reconstruction, any profit you will get, such profit you need to transfer to reconstruction account, which is a new point, guys. First time we are come acrossing. Next, debenture holders forego their interest of 26,000, which is included among the trade payables. Okay. Anyway, if they are ready to foregone means they are ready to foregone the debenture holders interest means there is a decrease in the liability. Outstanding interest. This interest is an outstanding interest. Such outstanding interest, these there under trade payables, decrease in liability is again a profitable situation. So the entry is trade payable account data under bracket outstanding debenture interest. Because it is clearly given that outstanding debenture interest is included under trade payables. Amount how much? 26,000 to reconstruction account. To reconstruction account. Next, come to point number 5, all of you. The preference shareholders agreed to waive their claims for preference share dividend, which is in arrears for the last 3 years. If any unrecorded liability is sacrificed by the other party, no entry. No need to pass any journal entry. So, in each and every problem, This point is included always. Maybe something waived off, something we are paying, like that it is giving. That's why this adjustment is important adjustment. In each and every problem, there is a scope to ask. Okay. Come to point number 6, all of you. B, 6% debenture holders. There are two types of debenture holders exist. A type of debenture holders, B type of 6% debenture holders. So B type of 6% debenture holders agreed to take over the Chennai works at 4,25,000 and to accept an allotment of 1,500 equity shares of rupees 10 each at par. And upon their forming a company called GIA Limited to take over the Chennai works, they allotted 9,000 equity shares of rupees 10 each, fully paid at par to the Star Limited. Sir, what about this all? So can you please concentrate? Come to my OneNote. Before writing the journal entries, I will explain the entire story, what happened. I told you, you need to understand the scheme of internal reconstruction properly. Then only you can pass the journal entry. Now, first, if I go to the liability of debentures, sir, this problem is taken for the discussion only for these issues. So these issues are altogether new to you. How to handle, you should know. If the same problem come across in the examination, how to handle, you have to know. Now, 6% debentures is a liability, right? So B, 6% debentures is there in my books of accounts at 3,50,000. This is 3,50,000. Whenever B 6% debentures balance is 3,50,000, that means our company need to payable to the debenture holders to the extent of 3,50,000. Am I right? Now, our company is decided to give our Chennai works at 4,25,000. Now, to such debenture holders, we are issuing our Chennai works. You know, Chennai works is a PPE. Chennai works is a PPE. So the worth of the Chennai works we are giving is 4,25,000. Fine. And to accept an allotment of 1,500 equity shares, we are telling that the other person need to accept. The other person need to accept how much? 1,500 into 10, which is equal to 1,50,000. Okay. 1,50,000 worth of equity shares also they accepted. Am I right or wrong, guys? 1,50,000 worth of equity shares. Next, what he is given. And upon their forming a company called GIA Limited to take over the Chennai works, they allotted 9,000 equity shares of rupees 10 each. They allotted means debenture holders allotted to us. Sir, why actually there is a necessity to offer equity shares by the debenture holders? I will tell you the story. Okay, just give a moment. How much that is? 9,000 into 10, which is equal to 90,000, which is equal to 90,000. 1 second. 2,50,000 plus 1,50,000 to 5 lakhs. Just a moment, guys. Hope everything is, there is no print mistake in point number 6. Just 1 second. I'll cross check. Yeah. There is no print mistake. Not an issue. Come back. Now concentrate, all of you. What is happening here? I'm going to explain. Sir, now 6% debenture holders agreed to take over Chennai works for 4,25,000, right? Where is my OneNote? Here it is there. 1 second. Now 6% debenture holders agreed to take over my Chennai works for 4,25,000. But how much amount I need to payable to such debenture holders? 3,50,000. Am I right? Now, what they are telling, they will accept 1,500 equity shares. They are taking the Chennai works and they are telling that, sir, we will accept 15,000 worth of equity share capital as well. 15,000 worth of equity share capital. If you observe 3,50,000 already they need to pay. That's why 3,50,000 I will set off. And equity shares also they accepted. That is another consideration. 3,50,000 plus 15,000. How much? 3,50,000 plus 15,000. How much? Which is 3,65,000. Now still how much amount they need to pay? 4,25,000 minus 65,000. Still how much amount they need to pay? They need to pay 60,000, right? The difference is how much, guys? Please let me know. Then why they actually allotted 9,000 equity shares? That is actually, is there any print mistake? Is there that's why I'm worrying. Just give a minute, guys. I will cross check with solution, then I'll get a better clarity. Okay, 6% debentures to debenture holders. We need to receive 3,50,000. No doubt about it. Debenture holders, which is 4,40,000, he is given. Okay, for Chennai Works 4,25,000, they are taking 1,500. Yeah, now everything is absolutely fine. Now I understood. Concentrate. There is no print mistake. We only understand in another way. So now all of you please concentrate. Whatever I made the discussion related to point number 6 till now, please ignore. Now I will tell you what happened really. So the problem in case of reconstruction is understanding of the scheme. If you understand the scheme differently, you may provide the answer differently. Okay. So please let me concentrate. All of you, you should also concentrate from your end. One thing is sure, 6% debenture holders agreed to take over Chennai Works for 4,25,000 and to accept an allotment of 1,500 equity shares of rupees 10 each at par. That means total 4,25,000 plus 15,000 total need to payable to the debenture holders. The total amount we are paying to the debenture holders is 4,40,000. The amount payable to the debenture holders is 4,40,000. I told you can ignore the old discussion. All of you, to the debenture holders, total amount payable by company is total 4,40,000. That is, we are giving such 4,40,000 in the form of PPE 4,25,000. In the form of equity shares, we are giving 15,000. Total, we are issuing 4,40,000 worth to the debenture holders. But really, how much amount need to recover from the debenture holders? 3,50,000. Sir, how much amount excess you are giving to the debenture holders? The difference excess you are giving to the debenture holders. Excess payment to debenture holders you made to the extent of 90,000. That excess, how they compensated by debenture holders? Now they took the PPE of your company, right? Your company means Star Limited. After takeover this PPE, debenture holders started their own company, which is GIA Limited. Started their own company. Now the difference of 90,000, they are compensating in the form of their equity shares. That is allotted 9,000 equity shares of rupees 10 each. 9,000 into 10 is equal to 90,000. So 3,50,000 plus 90,000, then which is equal to 4,40,000. This is the level of understanding you should need from your side. So I also, at the time of reading first time, so I am in the little bit of dilemma. Is there any print mistake is there? Okay. After that, I am confirming with the printed solution. Now I understood properly. One more time I am explaining. All of you please concentrate. Sir, for 6% debentures, you are giving Chennai Works and to accept an allotment of 1,500 equity shares. Now you are also giving equity shares as well. you are allotting equity shares as well. You are giving your PPE as well as your equity shares. So the total amount you are paying to the debentures is 4,40,000. But the actual amount need to be payable to the debentures is only 3,50,000. So why you paid the excess of 90,000? As a result, you are getting the shares of the GR Limited for that extent of 90,000. Then exactly debenture holders are settled. So now how to pass the journal entry? Now, first and foremost thing, 6% debentures are there in my books of accounts, which is at 3,50,000. Such 3,50,000, I need to make it transfer to debenture holders account. 6% debentures accounted are to debenture holders account. Now our company need to be payable 3,50,000 to the debenture holders. But our company paid total how much? Let us have a discussion here. Our company paid total debenture holders 4,25,000 in the form of freehold property, 15,000 worth of equity shares. Total 4,40,000 we paid to freehold property, 4,25,000 to equity share capital, 15,000. Now, if you observe, amount payable is 3,50,000, but we paid 4,40,000. Excess 90,000 we paid, right? For such excess 90,000, we are receiving equity shares of GR Limited. Now, equity shares of GR Limited account data, which is consideration in the form of cash we are getting. Okay. Other than in the form of cash, just we are getting equity shares. Equity shares of GR Limited account data. How much for the difference? 90,000. Two debenture holders. This 90,000 is investment, guys. You can call it as investment in equity shares of GR Limited we are getting. Now, if you observe, after making all these three entries, the balance in debenture holders account is 0. Here credit 3,50,000, here credit 90, total 4,40,000, debit here 4,40,000. Now the balance is 0. Hope you understand. So the transaction is very simple, sir. The transaction is very simple. For debenture holders, this is the giving amount in the form of 4,25,000 freehold property. In the form of equity shares, we are giving 15,000. Now, as a result, we are taking from the debenture holders, liability is discharged. For 3,50,000 liability gone, we are getting investment in GR Limited, that is 90,000. To understand such simple transaction, he confused completely in the problem. Okay. So he is not giving directly, just he might confuse the students. But what happened really, we are giving our freehold property, we are giving equity shares. As a result, the liability is discharged for 3,50,000. You are getting investments in GR Limited for 90,000. For that, you pass with the three entries. Is it clear, all of you? Can I proceed? Okay. Come to point number 7. Point number 6 is the crucial problem to complete the problem. The Chennai Workmen Compensation Fund disclosed that there were actual liabilities of rupees 1,000 only. Now, if you come here, where is the Chennai Compensation Fund? Under liabilities. Under liabilities, Chennai Workmen Compensation Fund, it is clearly given that liability is there for 5,000, but actual liability is only there for 1,000. Now, what is the difference? There is a decrease in liability, means the profit will need to be transferred to reconstruction account to the extent of the difference, 4,000. The entry liability account data to reconstruction account to the extent of 4,000. Am I right? Let me pass the journal entry here. Chennai Work. I'll take it as a point number 6 actually. Okay. Chennai Works Compensation. Chennai Workman Compensation Fund account data, which is a liability, decrease in liability. So in bracket, if you want, you can record it as a liability. 4,000 is decreased. Such 4,000 you can make it transfer to reconstruction account, which is 4,000. Next, come back. Still we are in point number 7. So I seen only the first issue. As a consequence, the investment of the fund were realized to the extent of the balance. Now it is clearly given that the liabilities amount is decreased. That means we need only investment for the worth of 1,000 rupees liability only. You can realize all the remaining investment. You can realize all the remaining investment. He told entire investments were sold at a profit of 10% on book value, and the proceeds were utilized for part payment of the creditors. You have to read these two sentences in combinedly. As a consequence, the investments of the fund were realized to the extent of balance. To the extent of balance means by leaving this 1,000 rupees, because liability is 1,000 rupees na. For making payment to such liability, you may realize the investment in future to that extent of 1,000. By leaving such 1,000 rupees investment, you can realize the balance of the investment entirely. You can realize the balance of the investments entirely. Now, if you observe, the total amount of the investment is 15,000. If I leaving 1,000 rupees, the remaining investments is 14,000. These entire 14,000 investments I realized at a profit of 10%. It is clearly given that entire investments were sold at a profit of 10% on the book value by leaving the 1,000 rupees investment. That is 14,000 into 110%. Profit 10% means we are getting into 110%. How much you are getting? 14,000 into 110% means 15,400 rupees you are getting. The difference is 1,400, which is profit you need to transfer to reconstruction account. Now all of you please observe what is the entry we need to pass here. Bank account debtor to investment in which type of investment it is? Yeah, investment for workman compensation account. So we are getting 14,000 into 110%, which is equal to 15,400. Investment book value is 14,000. The difference you can need to make it transfer to reconstruction account. Reconstruction account. Do you all with me, guys? So the problem is little bit different problem. I take up for the purpose of discussion. That is the main reason. I taken for the discussion with such reason. Okay, come back. Point number 7 is also over. So the proceeds were utilized for part to payment of the creditors. Okay, part to payment of the creditors means he will given at the next instance. Let us have a scene. Or part to payment of the creditors means you can give such payment. You can give such payment to the creditors as well. He is given part repayment of the creditors only, right? So trade payable we can give trade payable account debtor to bank account. Yes, that is also form part of that point only. He clearly mentioned, right? What is that? The proceeds were utilized for part to payment of the creditor. Now the trade payable balance is used, but we are only paying the part repayment only. Okay, the proceeds were utilized. Next, inventory was to be written off by 1,90,000. That is common, and a provision for doubtful debts is to be made to the extent of 20,000. So the entry reconstruction account debtor, downward revaluation, guys. Reconstruction account debtor. How much? Written off by 1,90,000. Next, provision for bad debts. You can directly write trade receivable account debtor in bracket, which is PBD. Is it profit or loss? Sorry, we should not write like this. Sorry. I'm too sorry. So reconstruction in bracket 1,90,000 for downward revaluation, and PBD is 20,000. So total 2,10,000. To, you can write like this, to decrease in inventory, to inventory 1,90,000, to trade receivables, decrease in trade receivables, that is PBD, which is 20,000. Am I right? Which is a loss situation, downward revaluation of assets. Chennai Works completely written off. Sir, Chennai Works already taken over by debentures, na? But still he is telling that Chennai Works completely written off. Only 4,25,000 worth of works only taken over by the debentures. Remaining works are there na. What are the total amount of the PPE related to Chennai works? 7,75,000. The total amount is 7,75,000. Out of such 7,75,000, debentures taken over only 4,25,000. Still, it is there for the worth of 3,50,000. Now, such Chennai works are completely written off. Sir, downward revaluation of asset, that is PPE, reconstruction account debtor, PPE account, that is to Chennai works account. Chennai works PPE account. How much? 3,50,000 entirely goes to set off with reconstruction, which is a reconstruction loss. Next, any balance of the capital reduction account, which is nothing but reconstruction account, is to applied as 2/3 to write off the value of the Bombay works and 1/3 to the capital reserve. First, before seeing this point number 10, let us first calculate how much balance is there under reconstruction account. All of you please follow along with me. So if reconstruction is credited, positive balance, reconstruction account is debited, the negative balance. In the first entry, positive 1,80,000. Second entry, positive plus 9 lakhs. Third entry plus 50,000. Fourth entry plus 26,000. Coming to point number 5. Point number 5, there is no reconstruction account impact here, right? Just leave it. Come to point number 6 plus 4,000. Come to point number 7 plus 1,400. Point number 8, no impact. Point number 9, minus 2,10,000. Point number 10, minus 3,50,000. I got 6,01,400 is the balance. Please repeat point number 7. I will repeat at the end of the, after completion of the problem. Just hold for some time. Okay. So balance in reconstruction, I got 6,01,400. Now he is telling that any balance of capital reduction account is to be applied as 2/3 to write off the value of the Bombay works. Out of this, 2/3 is utilized to write off Bombay PPE. Remaining 1/3 he is giving to transfer to capital reserve. Now the entry is reconstruction account debtor, which is 11th entry actually. Reconstruction account debtor 6,01,400 to Bombay works. No need to see the actual amount, just apply the 2/3. 6,01,400 into 2/3. So which is equal to, into 2/3 means how much, guys? You are getting 4,933 to capital reserve. To capital reserve, what is the difference? 6,01,400. Sorry, this is 6,01,400, guys. Sorry, yeah. This is not 408. You can correctly made it 6,01,400 into 2/3. This one is correct only. 4,933, and the difference is how much? So the difference I got 2,04,67. Am I right, guys? So this is the last entry. 2/3 you may transfer to set off Bombay works. Remaining 1/3 you need to transfer to capital reserve. Now all of you please understand. Sir, persons are asking, can you please explain point number 6 and 7? Yes, these 2 points are the crucial points to complete the problem. If you understand these 2 points, then problem is over. Nothing is there. Now, I will explain one more time. This is the last time for point number 6. 6% debenture holders agreed to take over the Chennai works for 4,25,000 and to accept an allotment of 1,500 equity shares of 10 each at par. Now, you are giving 2 things. One is asset, another one is equity share. If you really remember the concept of purchase consideration in amalgamation, what you are paying you can issue equity shares, you can issue debentures, you can issue preference shares, you can issue cash, you can issue any other asset. Now you are giving one asset, which is 4,25,000. Apart from that, you are issuing equity shares as well. That is for the worth of 15,000. Total purchase consideration you are paying 4,40,000 to the debenture holders. But really, debenture holders book value is how much? But really, debenture holders book value is how much? Only 3,50,000. So the book value is there for 3,50,000, but you are issuing 4,40,000. How much excess you are issuing? 90,000 you are issuing, right? The excess. For such 90,000 also you are getting the benefit in the form of shares of the company which is formed by the debenture holders. Now 4,40,000 is knock off with 3,50,000. The excess amount need to be payable by debenture holders to our company is 90,000. The excess amount they are paying in the form of equity shares of that such company, which is ZIA Limited, which is 90,000. That means it's very simple. Our company is paying 4,40,000 to debenture holders. As a result, we are getting liabilities decreased for 3,50,000. We are getting 90,000 worth of investment. That's it. That is the end of point number 6. Point number 7 is he is telling that, sir, liability is decreased to 1,000 related to workman compensation fund. Now, the workman compensation fund, if you check here, Chennai Works is 5,000, but it is clearly given that workman compensation fund is decreased to 1,000 rupees means decrease in liability. You can make it transfer to the reconstruction account as a profit. And apart from that, he also mentioning some other information here. What is that? As a consequence, as a decrease in liability, the investments of the fund were realized to the extent of the balance. So now, what is the total liability here? If you observe, the total liability is 10,000 plus 1,000, 11,000 only. Only 1,000 is the liability now. So this is not a 10,000 as well. 10,000 is also not a liability. Only 1,000 is only the liability because for 10,000 he is not mentioning anything. That's why just the 1,000 rupees only the liability. So due to there is very low balance in the liability, they decided to sell these entire investments. Now you should put aside 1,000 rupees for the purpose of liability. You can sell remaining all investments in the outside market. Now you sold such investments by getting at 10% profits. Now you are getting 15,400. That's why I passed the entry for the purpose of realization of investments, which is where it is, which is bank account data to investments for workman compensation 14,000, profit is 1,400 transferred to the reconstruction account. With the amount you are getting through realization of investment, it is given that you can make sure that making payment of part repayment to the trade payables. Just why I should made a part repayment. So it is given that where it is, yeah, here. Please concentrate here. As a consequence, the investments of the fund were realized to the extent of the balance. By leaving 1,000, the balance is 14,000. Entire investments were sold at a profit of 10% on book value, and the proceeds were utilized for part payment of their creditors. I utilized it to make repayment to trade payables. That's it, guys. This is the end of the problem. Am I right? Hope everyone is understood. So if these type of problems are asked in the examination with a little bit care, you should need to done. Almost the level of difficulty also you've seen from since the inception of the problem to the last problem. This is the end of internal reconstruction. Sir, but I can tell you one thing, guys. Even though you are making practice for n number of problems, like if you are making practice for 100 problems, maybe in examination there is a chance to ask 101th problem. What you required here, understanding power. So how the scheme is designed, you need to understand. Accordingly, you should need to pass the journal entries. That is a specialty of internal reconstruction chapter. Okay, right. Come back, guys. Without wasting much time, let me entering into the new topic. Our new topic is liquidation of companies. Please, all of you come out from this chapter, internal reconstruction. Please, all of you shift your concentration towards the new chapter, which is liquidation of companies. Can I start, guys? Can I start with the new chapter, liquidation of companies? Still, we have 2 more slots are available. So today's slot, we are taking almost more than half also for liquidation of companies. Approximately, we are spending 2.5 slots. We can put together more than 2.5 slots we are spending on liquidation of companies. So all of you put the heading in your notebooks, liquidation of companies. And one more, whether you are observing or not, I don't know. So after completion of the session, I'm uploading the entire classroom notes in the respective PDF download corner. Okay. So you can make it download at any point of time. You can put it as a reference. It is highly useful. Whatever the discussion I am doing in my OneNote, which is highly useful at the time of recollecting the things before going to the examination as well. So please make it download. If possible, consolidate it entirely after completion of the sessions. You can use it as a reference. I'll do one more for you guys. I'll do one more for you that is out of my interest. I have a full-fledged material with respect to both accounting paper 1 and advanced accounting paper 5. How my material is given for these 3 chapters. So like this, a full-fledged material is there for both group 1 as well as group 2. So the advantage of the material I will tell you. This material consisting of, you already seen, study mat problems and previous examination problems and RTP problems, including MTP problems. So I took a lot of effort to collect all such things and put it in my material. That is one thing. Another thing, the theory level, you may not find the theory here and there before going to the examination. The entire theory is make it in such a simple manner and such an understandable manner to each and every student. That's why you can easily revise the entire theory, because once if you are become strong in such theoretical issues, then you can easily crack the problems, which is highly useful in examination point of view. I will share at the end of my session, at the last day of my session, I will upload the entire material. You can find it from the material corner. Okay, come back. So the chapter is liquidation of companies. Sir, we gave the best efforts either to go for external reconstruction or to go for internal reconstruction to avoid the liquidation of company. Our companies are loss-making companies now. Whenever we are starting our sessions, our companies are a loss-making company, not showing true and fair view. That's why we can go for either external reconstruction or we can go for internal reconstruction. So even though after making such all things, there is no developments or there are no internal advantages to the company, still the situation of the company is in worst scenario. Now the company wants to go for liquidation. Do you understand? Which is the last stage. Whenever a company want to go for liquidation, what is the accounting treatment we need to adopt, sir? You already know the accounting treatment. 5-step approach in the books of selling company. Here we are not dealing such accounting treatment. So dismantling of balance sheet, assets and liabilities are sold in the outside market. We will make to the repayment holders in a particular order. You should need to do all such things. But in the chapter liquidation of companies, we are not dealing anything with accounting issues. I mean, no journal entries we are passing anywhere. So then what you are going to discuss, sir? The first point I'm emphasizing here, in liquidation of companies, we are discussing procedural issues. Yes, what you listen is correct only. We are dealing with liquidation procedure. Liquidation procedure we are seeing. So many students, they thought that in the chapter liquidation, maybe accounting treatment is going to discuss, but nowhere even a single journal entry is not discussed by me. It is not like in this case of internal reconstruction. It is not like in the case of amalgamation. Simply we are going to discuss the liquidation procedure. Okay. Now, before seeing such liquidation procedure, first let me start with the concept of or the meaning of winding up or liquidation. You know, the company is a corporate personality. The existence of such corporate personality is possible through law. Who created the company? Law only created. Then ultimately the death of the company, that is the closure of the company, should also need to occur through law. Tell me guys, as a human beings, we believe that so we are on the earth or our born. The reason for our born is God. Am I right? So our death is also in the hands of whom? God. So everyone is believing that, right? In the same way, the birth and death of the corporate personality is in the hands of law. You need to, what is that law? So that law is Companies Act 2013. A company who wants to start their business activities with the name of the company, it should incorporate such company as per the Companies Act 2013. So much of incorporation procedure they need to adopt. Hope you would seen such incorporation procedure under Group 1 Paper 2 law, that is incorporation procedure. So practically in your articles, at the time of incorporation, what are the procedure you need to be follow, you would come across as a practical scenario. Okay. Now, at the time of winding up of the company or liquidation of the company, what is the procedure you need to adopt? Now we are seeing, but very rare cases in your articles you may come across the liquidation of companies. If such liquidation of companies will come, that is your luck. You may be practically involved in such liquidation procedure as well. Okay, now concentrate. Sir, I am using two words. If you observe, one word is liquidation. Another word I am using winding up. Sir, is there any difference between liquidation and winding up, and both are same? But for the entire act or in the Companies Act 2013, nowhere they are differ. Both are synonymously using. The liquidation and winding up, both are same. But conceptually, those are different, guys. Conceptually, those are different. How it is different, I will explain here. Concentrate. It's very easy. Sir, whenever a company wants to go for liquidation, that is either may be due to compulsory liquidation or voluntary liquidation, as the case may be. Whenever a company wants to go for liquidation, the liquidation procedure will start from here. Sir, once the company want to go for liquidation, then liquidator will be appointed. In very layman approach, I am telling, a liquidator will be appointed. Once the liquidator appointment is over, then what the liquidator will do? He will start realizing the assets. He will make payment to the various parties in the particular order. Amalgamation we already seen. Am I right? Now, after completion of that all process, at the end, court will pass an order. To struck off such company from ROC records, from ROC database. Now, this time frame is there na, sir. It will not complete. Realization of assets and making payment to the liability holders will not complete within a week, within a day. So you can imagine a joint stock company like Reliance Industries Limited, in how many products that involvement is there. If you take the Tata Group of Industries, in various locations the business is conducted, in various products the business is conducted, various buildings are there, various manufacturing units are there, a lot of employees exist. So that's why to close the company, it will not come over, or it will not cross over within a week or month. It will run over years. Yes, what you listen is right. It will run over years. Now, during such time, the business is still continued. Business completely is within the control of the liquidator. Liquidator start realizing the assets and he will make payment to the liability holders. Such entire time frame is required. Such time frame is known as liquidation. Such time frame is known as liquidation. That means whenever a liquidator is appointed, then the liquidation proceedings are started. But once the court order for winding up, that company is struck off from the database of ROC, then we can set to be the company is in winding up. The company is in winding up proceedings. That means the court passed a winding up order. We are in generally said to be the court passed a winding up order. I can differentiate like this. Winding up is an event. Liquidation is a transaction. In our accounting, there is a difference between transaction and event. We will see, right? Liquidation is a procedure or a transaction. It is a transaction or a procedure. Winding up is an event. Event means which is the last event as a result of liquidation. So winding up occurred as a result of liquidation. This is the conceptual difference, but synonymously we are using both words as same. Liquidation or the winding up, whatever the words if you want, you can use the same words, guys. There is no difference for the entire act. Next, come to the next level of discussion. Sir, how many types of winding up is there, sir? So whenever I am using the winding up, it includes liquidation as well. How many types of winding up or liquidation is there? So basically, winding up is two types. One is compulsory winding up. One is compulsory winding up. Another one is voluntary winding up. Another one is voluntary winding up. One is compulsory winding up. Another one is voluntary winding up. Compulsory winding up means that company should need to be wind up. Maybe they are not having a thought of close the business, but due to certain situations or due to certain circumstances, they need to winding up. In that circumstance, we can set to be the company is compulsory need to wind up. Voluntary winding up means the company is willing to close their business. The company is willing to close their business. Then we can call it as voluntary winding up. Now, compulsory winding up may happen in two different situations. The compulsory winding up may happen due to inability to pay debts, due to inability to pay debts, maybe other reasons, maybe other reasons. You know, due to inability to pay debts means, due to inability to pay debts means company became insolvent. Company became insolvent. All the worth of assets are not enough to make repayment to the liability holders, then we can set to be the company is insolvent. Now, due to inability to pay debts, the company may go for compulsory winding up, or maybe some other reasons are also there for the purpose of going for compulsory winding up. Okay, now concentrate. The other reasons we are discussing as per Companies Act 2013. That is different story. Now concentrate. The applicability I'm discussing. Other reasons I will tell you at later point of time. First, let me discuss the applicability. So coming to voluntary winding up, the entire voluntary winding up done up to 31st March 2017. Up to 31st March 2017, the entire voluntary winding up are done as per Companies Act 2013. From 1/4/2017, the voluntary winding up proceedings are based on Insolvency and Bankruptcy Code. Insolvency and Bankruptcy Code. Code 2016. In shortcut, we can call it as IBC. Insolvency and Bankruptcy Code 2016. IBC 2016. Now, coming here, due to inability to pay debts, IBC court rules, IBC insolvency court rules are applicable. Insolvency court rules are applicable. In case of other reasons, if the company is compulsorily wound up, Companies Act 2013 is applicable. To put it simply, right now, the major portion of the winding up provisions is in the hands of Insolvency and Bankruptcy Code 2016. Now, in the current situation, if the company wound up voluntarily after 1/4/2017, IBC code is applicable, and a compulsory winding up due to inability to pay debts, at that point of time, also IBC insolvency court rules are applicable. Just a moment, guys. I'll put the text as well. 1 second. Yeah. Right. Please, all of you concentrate this diagram, then you will get much more clarity. Mode of winding up: on inability to pay debts, Insolvency and Bankruptcy Code with its regulations are applicable. These two are compulsory winding up. This is voluntary winding up. Now, on inability to pay debts, IBC regulations are applicable. Grounds other than inability to pay debts, that is other reasons, Companies Act 2013 with court rules are applicable. Voluntary winding up to 31st March 2017, Companies Act 2013 is applicable. From 1st April 2017 onwards, Insolvency and Bankruptcy Code with voluntary liquidation process regulations are applicable. Do you understand? All of you, the same diagram actually I made. Now, the next question coming into my mind is, sir, compulsory winding up in case of other reasons. What are such other reasons, sir? Can you please explain what are such other reasons? Do you know, as per Companies Act 2013, a company should be winding up if it violates the following conditions. I am giving certain scenarios or certain situations. If company violates such conditions, then the company should go for compulsory winding up. Or before discussing such situations, sir, who can make for the petition of the compulsory winding up, sir? Due to other reasons, as per Companies Act 2013, who can make petition? Who can make petition? Sir, the petition should be made to whom? The petition should be made to NCLT, National Company Law Tribunal. Do you know the regulators of the Companies Act 2013? Hope I already told you. Register of Companies is one of the regulator, ROC. Sir, each and every state in generally having one ROC. The entire state administration is in the hands of ROC. Now, for example, I'm in Telangana right now. Right now, I'm taking classes from Telangana. Now, in Telangana, we have in Hyderabad a separate ROC office is there, which is completely doing the administration of Telangana. Okay. So then, after Register of Companies, the next level is regional directors, RD, so-called as RD, regional directors. Maybe northern region, southern region, eastern region, western region, okay, northeast region, like that. Entire India is subdivided into 7 regions, guys. Entire India is subdivided into 7 regions, each and every region having a separate regional director. Above the regional director, NCLT is there, National Company Law Tribunal. Above the National Company Law Tribunal, National Company Law Appellate Tribunal is there. Appellate Tribunal, which is known as NCLAT, National Company Law Appellate Tribunal. Above the NCLAT, High Courts and Supreme Courts are in generally administering. So just I'm writing the regulators, which is highly useful for understanding various acts, guys. Before reading any act, you should need to check the regulators as well. So regulators as per Companies Act, because multiple times the NCLT will come in the Companies Act. So the primary is ROC, which is Register of Companies, then RD, Regional Directors, then NCLT, National Company Law Tribunal, then NCLAT, National Company Law Appellate Tribunal, then other courts, that is High and Supreme Courts. High Court and Supreme Court, they can take any cases. They have that power. Why? Because the apex court in the India is Supreme Court. They can take any cases. Okay, come here. Now, who can make a petition to whom? To whom means which is NCLT. Who means the person who is either shareholders can make a petition, either ROC can make a petition, either central government can make a petition, either shareholders, either ROC, Register of Companies, or the central government can make a petition to the NCLT to make a compulsory winding up. In which circumstances they can have a power to make such petitions, such circumstances I'm going to explain. Concentrate, all of you. Now I am dealing with circumstances in which compulsory winding up is possible other than in the case of inability to pay debts. If the company is inability to pay debts, this is altogether different story, then IBC courts are applicable. Now, but other than insolvency, if the compulsory, in which situation the company need to be compulsorily winding up, we are going to see. The first and foremost point. So the company is acting against sovereignty and integrity of country as a whole. Company affairs or company is acting against sovereignty and integrity of country as a whole. You know, sovereignty is integrity is actually a fundamental duty of every citizen of India. The Constitution of India gave fundamental rights as well as fundamental duties. Maybe in lower level of classes, you would have come across these fundamental duties and the fundamental rights. Now, as a citizen of India, you should not conduct any activities which against the sovereignty and integrity of India. Sir, what exactly the meaning of sovereignty and integrity, sir? I can give one best example. Hope you know, approximately 1 year or 2 years back, I think so, it is 2 years back, there is very worse situation at the border in between India and China. So the soldiers of China is trying to enter into the India. Just they want to take some of the places of India and make it converted into a China. So they tried for that. Am I right? I mean to say, certain soldiers are also died at that point of time due to happening of some very small war-like situations in between the China and India at the borders. At that particular point of time, India banned certain products of usage of China, and we denied to provide certain services to the China as well. Certain export we stopped. For example, still the Indian government make an order that not to support the Chinese by using the China products, as well as don't export to the China. But still your company is making export to the China in that particular situation, which is against the sovereignty and integrity of the country as a whole. Do you understand the sovereignty and integrity means? Okay. Next, coming to point number 2. Company affairs are completely in fraudulent manner. or the company is incorporated only to deceive the public. Company is incorporated to deceive the public at large. Our intention is completely to deceive the public, to loot the money from the public. Then if it is your intention, then any of the persons can make a petition to the NCLT for compulsory winding up. Point number 3. A company failed in filing of annual returns. Company failed in filing of annual returns for continuous period of 5 years. For continuous period of 5 years. Do you know the meaning of annual returns? All of you? Do you know what exactly the meaning of annual returns? I'll tell you some story here, not relevant for the liquidation of companies, but which is highly important. Having interlinkups in the multiple subjects. Concentrate. This is a practical issue. Annual return is a practical issue. You know, in case of companies, they will in generally having a financial system. The financial system means they are using a software. It may be a Tally, ERP. It may be a SAP. They might using an ERP, or they might using a Joho Books. They might using a QuickBooks. Various softwares are available in the outside market for the purpose of bookkeeping. They will have a financial system or software for bookkeeping. Sir, once bookkeeping is over, with the records of bookkeeping, they will prepare financial statements. That software itself done that job as well. Financial statements. Nowhere the chartered accountant is conducting the bookkeeping manually. All such things are right now automated without having interaction of the financial professions. Entirely the companies can do their business activities. They can convert such information with the financial statements. Now, after preparation of such financial statements will go to board of directors. Sir, whose responsibility the preparation of financial statement? That is management only. Management will appoint a CFO, then CFO will take over all such financial issues. Then the financial statements are in front of the board of directors. Board of directors will conduct a board meeting. They will discuss about the financial statements. If any modifications are there, they will make it order for change such modifications as well. Then in such board of directors meeting, they will approve the financial statements. Sir, why board of directors will approve the financial statements? I already told you it is the responsibility of the board of directors to prepare financial statements. Whatever the figures they are given in the financial statements, for each and every figure, who is responsible, sir? Board of director is responsible. That means any fraud is occurred in such figures. Who is responsible, sir? And the board of director is responsible. So that's why they should need to approve such financial statements. Now, by taking such approved financial statements, auditor will conduct the audit. Yes. We are not conducting the audit on unapproved financial statements. If the board of directors are not taking the responsibility, how can I conduct the audit? Now, on such approved financials only, I need to conduct the audit. Now, auditor will issue audit report. Now, board of directors will approve the financial statements. Now, auditor will give the audit report. Then financial statements plus audit report. Is sending to shareholders. It will be sent to all the shareholders of the company. Along with these financial statements and audit report, company will also send an invitation for the general meeting. Now, financial statements, audit report, and invitation for general meeting put together, we in generally call it as annual report. In such annual report, the last phrase is related to invitation for the general meeting. So you will learn the concept. Such one only we should give a notice, clear days of notice before 21 days of conducting of the annual general meeting. You need to send these documents. 21 clear days of notice you should given to each and every shareholder. Then shareholders will attend for the general meeting. Then shareholders will attend for the general meeting. Attend for general meeting. Then the shareholders will do certain activities in the general meeting. They will lay such books of accounts. I mean, the shareholders right now also will accept or will approve the books of accounts. Shareholders will approve the books of accounts because who are the real owners of the company? Shareholders only. That's why they should need to approve the books of accounts. So ultimately, the audited financial statement should need to approve. Apart from that, in such general meeting, shareholders will also do some other important activities. Those are appointment of auditor for the next financial year. Appointment of auditor. Appointment of board of directors. Sir, if they're really not satisfied with the existing board, they may will appoint the new directors as well. Next, declaration of the dividend. In the current year, if they want to declare any dividend, such declaration of dividend is also going to happen. This is known as general business. Apart from this, anything if they discussed in the general meeting, which is known as the special business. Sir, why you are telling all these things, sir? All are completely interconnected. If you are well known this procedure, then you can easily understand any concept behind the finance system. Now, still not yet over. My discussion is not yet over. After completion of the general meeting, from the date of the general meeting, within 30 days, they need to file financial statements to ROC. They need to file the financial statements, what they prepared, what they discussed in the general meeting within 30 days to the ROC, because such financial statements should be available to the whole of the society. How it is possible? Then ROC will put it into their database. Then if any person want to get the access of such financials as a shareholder, as a supplier, as a government, then they can directly access. Financial statements are the freely accessible documents. Okay, so within 30 days, I should need to apply such financial statement to the ROC. In which form? The form is known as AOC 4. Within 60 days of conducting the annual general meeting, they should need to apply another form which is known as MGT 7 or MGT 7A. For small and 1% company, they will follow 7A, other companies will follow 7. Sir, what it is all about? In this, they will discuss about shareholders pattern and the names of the shareholders. Okay, the registers maintained by the company. Apart from the financials, they will discuss remaining all other issues in the MGT 7 or 7A. Now, these two forms filing is particularly known as ROC filings. So today is 16th of Feb, right? Actually, yesterday is the last date for the ROC filings. In generally, due to pandemic situation, all dates are extended like anything. Now, the February 15th is the last date. All our chartered accountants are completely busy with their work, the practicing chartered accountants. But still, after considering the number of forms filed, again, the Register of Companies extended the deadline to March 15th. Now, one more month is extended to file the AOC 4 and MGT 7 or 7A without taking any penalty. Now, the filing of these ROC returns are known as annual returns. Annual returns. A company should need to file annual returns like AOC 4 and MGT 7 or 7A for each and every year with the ROC to get the financial information accessed by each and every person of the society. Such annual return preparation is failed for a continuous period of 5 years. Then if any person make a petition to the NCLT, then the NCLT can make it order for the compulsory winding up. That is the story, guys. Okay. Next, one more scenario just I want to explain here in case of compulsory winding up. If NCLT feels that, if NCLC feels that it is just an equitable basis, to close the company. It is better to close the company rather than continuing the company. Then if it want, they can order for the compulsory winding up. In case of all such situations, Companies Act 2013 will decide the liquidation procedure. In other cases, either voluntary winding up or due to inability to pay debts, Companies Act 2013 is not applicable. IBC, Insolvency and Bankruptcy Code 2016 is applicable. Hope you got it, guys. All of you. Okay, we can take a break, all of you guys. The time is 8:21, so you can take break up to 8:31. So please, all of you assemble exactly after 10 minutes. We will discuss the remaining things. Yes, friends, welcome back. I discussed up to reasons in case of compulsory winding up as per Companies Act 2013, other than due to inability to pay debts. Am I right? Now, after seeing the applicability portion, you can simply have a conclusion that most of the winding up proceedings are right now in the hands of Insolvency and Bankruptcy Code. Sir, why already Companies Act 2013 is there? What is the reason for introduction of Insolvency and Bankruptcy Code 2016? Right now, you are seeing, even though the stringent provisions are there as per the Companies Act 2013, so many examples or so many scenarios already we listened that certain companies are exclusively incorporated to conduct certain frauds. They took huge loans from the bankers without paying any amount to such bankers. Just they are simply liquidated such companies by taking the advantages of various provisions of the Companies Act 2013. To avoid such all malpractices, right now, most of the liquidation proceedings are shifted to the body which is Insolvency and Bankruptcy Board. I'll show you here, just a moment. Insolvency and Bankruptcy Board. So head office is in Delhi. Insolvency and Bankruptcy Board of India, which is a government agency, if you see here. Okay. So about us, if I open about IBBI, the Insolvency and Bankruptcy Board of India was established on 1st October 2016, but with effective from 1st April 2017, that is a different story, that consolidate and amends the laws relating to reorganization and insolvency resolution of corporate persons, of companies, not only companies, partnership firms, individuals at a town-bound manner, for maximization of the value of assets of such persons to promote entrepreneurship, availability of credit, and the balance of interest to all the stakeholders. I will only tell one point. It is a unique regulator, regulates a profession as well as process. Right now, if a company who is covered such liquidation proceedings under this IBB, Insolvency and Bankruptcy Board of India, the liquidator will also be appointed by this board only, IBBI only. If you want to act as liquidator, IBBI liquidator professional, chartered accountant is highly qualified. You can write a specific examination, then you can acting as a official liquidator as well. Actually, here certain official examinations are there. So if you check here, limited insolvency examination, valuation examination, certain examinations you need to be attended. So service providers, if you check here, insolvency professionals are there. Here in my cursor, if you are observing, insolvency professionals are there. Such insolvency professionals are appointed as liquidator. Okay, fine. Come back. Now, sir, we are not discussing this chapter based on Insolvency and Bankruptcy Code 2016. The reason is you are not aware any of the provisions of Insolvency and Bankruptcy Code 2016. You come across such act in your CA final under LI Laws paper number 3. So there is a separate act you are going to learn things related to Insolvency and Bankruptcy Code 2016. But if you are doing the company secretary course, which is actually inculcative of the again law paper. So apart from all those issues, I will only discuss very few issues related to Insolvency and Bankruptcy Code 2016. But we are not conducting or we are not learning the liquidation process based on IBC 2016. We are conducting the entire liquidation procedure based on Companies Act 2013 only. We learn such aspects for this test. Okay, but even though this code we are not reading, just I will tell you certain provisions of Insolvency and Bankruptcy Code 2016 in case of voluntary winding up, that too, not in case of compulsory winding up. In case of voluntary winding up, I will tell you. Concentrate. So the provisions are the procedure I need to adopt in case of voluntary winding up. So, after 1st April 2017, the entire voluntary winding up is going to occur as per provisions of Insolvency and Bankruptcy Code 2016. Now, what is the procedure, sir? First, if a company wants to liquidate voluntarily, before taking that decision or before applying for the voluntary liquidation with the IBC, first board of directors should give an affidavit. Affidavit means a confirmation letter. What that confirmation letter will say is, company having no debts or assets are sufficient to repay such debts. They should give affidavit regarding company having no debts or assets sufficient to repay such debts. Because when a company is said to be solvent, if have the capability or the ability to repay such amount to the debt holders, then only we are in generally said to be company is solvent. If the company is insolvent, then voluntary winding up is not applicable. Compulsory winding up, inability to pay debts, insolvency provisions are applicable. Am I right? So that's why first the board of directors should give an affidavit. Who have the good knowledge on the business affairs? Board of directors. That's why IBC will ask an affidavit from the board of directors that company having no debts or assets that are sufficient to repay such debts. Then only the IBC board will take such case for the voluntary liquidation or voluntary winding up. Now, apart from this affidavit, board of directors should also need to present financial statements for the preceding 2 years. From the preceding 2 years, they need to present. Along with the financial statement, they need to present valuation report of assets and liabilities. What is this valuation report is all about, sir? Actually, IBC provides a new gateway to the professionals like us, chartered accountants. Our opportunities are enhancing like anything in the dynamic environment. So nobody is predicted what the things are going to occur in the future. So recently in the year 2017-18, the valuation course is popular suddenly. The course itself is a valuation course. Okay, just now I shown you, right? What is that? Insolvency and bankruptcy. Here, if you observe out of the service provider, please all of you check here. Registered valuer is there. Here, right? Last but one. Registered valuer is there. Now this is a course. Registered valuation course is also offered by our ICAI as well. I'll open registered valuation course by ICAI. Registered valuer course, ICAI. If you can see on my screen, ICAI registered valuers organization, upcoming batches. Sir, who are eligible to join such batches, sir? Only the qualified chartered accountants can only eligible to write such examinations, because which are all our post-qualification courses. Now, what is the advantage, Now, a valuation report should be submitted to the IBC, right? This valuation report will be prepared by valuation professionals, that is registered valuers. Why? Because the assets and liabilities, the values shown under financial statements are not realistic. Maybe certain values are at book value, maybe certain values based upon the policies. But the real valuation in the outside market, who will know, sir? It is completely given by an independent valuer. Then only IBC can believe. So the registered valuer will prepare the valuation report of assets and liabilities. Now, the affidavit and financial statement and valuation report, with that you can make it submit to the IBC. But first of all, after completion of all these things, within 14 days, it should be first approved by the shareholders. Within 14 days, it should be approved by the shareholders, because ultimately the company belongs to the shareholders, right? That fact should be known to the shareholders because it is related to the liquidation. So without taking the approval of the shareholders, it is not possible. Then after shareholders approved, maybe the liquidation proceedings also impacted the creditors. There is some debts are pending payable to the creditors. Then apart from the approval of the shareholder, you should need to take the approval from the creditors as well. Approval from creditors. How the shareholders will give the approval? They will pass the special resolution. Out of the existing shareholders, 3/4 of the shareholders should accept for the liquidation. And in the same case, approval of the creditors means the creditor should also need to accept 3/4. Okay. Then the petition will goes to the Insolvency and Bankruptcy Board of India. Am I right? Now, IBBI coming into the picture. If everything is correct, then IBBI will take, will accept that case, and IBBI assumed that the liquidation proceedings are started. Liquidation proceedings are started from the date of passing such resolution or date of approval given by the creditors, whichever is later. That is, liquidation proceedings started from date of resolution. Let us assume from the date of passing resolution by the shareholders. Now, IBBI will appoint insolvency professionals. We seen earlier in my website, certain insolvency professionals are there. We can also register under insolvency professionals. If you qualify the examination, you can be acting as an insolvency professional. So the another name for insolvency professional, if I talk as per Companies Act 2013, we can call it as liquidator. We can call it as official liquidator, because which is appointed by a special body, right? So that's why which is known as official liquidator. Okay. Now, what is the duty of the official liquidator? You know, the duty of official liquidator is he will realize the assets, and settle the liabilities in particular order. Then after completion of this, a final copy of assets realization and liabilities settled, he will submit to court. That is the apex bodies as per that body. Courts are there, he will submit such thing to the court, because ultimately who appoints means court only. As per IBBI, regulators are there. Such regulator he need to submit. Okay. I can call it as regulator under IBBI. Now, the regulator or the court, what they will do, they will give intimation. First they will give winding up order. They will pass winding up order. After that, they will give intimation to ROC. To struck off such company. From database. Now, this much of procedure actually occurred. That is, started here journey, right? We started the journey here. Board of directors will give affidavit that company having no debts or the assets are sufficient to repay the liabilities, along with the financial statements, last 2 years audited financials, along with the valuation reports of assets and liabilities. Then within 14 days, it should be approved by the shareholders, or if creditors are there, the approval of the creditor should also be needed. Then the liquidation proceedings, we can assume from such rate of resolution. Then insolvency professional will be appointed by the IBBI board, who is known as official liquidator. He will realize the assets and settle making the liabilities in the particular order. Then the final copy will be submitted to the regulator. Then regulator will pass a winding up order and ultimately send the intimation to ROC to struck off such company from the database of register of companies. So this entire proceedings is not as per Companies Act 2013. This is as per IBC 2016 voluntary regulations. IBC regulations are two types. Voluntary regulations is different, and inability to pay debts, compulsory winding up regulations are different. So just now we seen voluntary regulations. So this was actually inserted in ICAI material. That is the reason why I taken for discussion. Okay. Now come here, come to our Companies Act 2013. Liquidation proceedings. Liquidation. Now we are entering into the chapter actually. Liquidation proceedings as per Companies Act 2013. You know which circumstances the Companies Act 2013 provisions are applicable. That is before 1/4/2017 voluntary, and right now compulsory winding up inability to pay debts. Compulsory winding up inability to pay debts. Am I right? Sir, in case of compulsory winding up inability to pay debts, sorry, compulsory winding up other than the inability to pay debts, in which circumstances in generally a company going into the liquidation, you know. So we've seen if a company who failed to file a return for a continuous period of 5 years, annual returns, maybe which is against the sovereignty and integrity of the country, maybe the company affairs are fraudulent in manner or the company is incorporated to deceive the public at large, or it is equitable basis, then the NCLT can go for make it order. But before doing this, first we can make a petition now. You know already the petition can be given by whom? You know already the petition can be given. We've seen here where it is. We've seen here. Who can make a petition? Either shareholders or the ROC or the central government to the NCLT. Now all of you please concentrate. At the time of filing the petition, board of directors should present a statement to NCLT. Then NCLT then only accept the case. NCLT then only taken for the discussion. What is that statement, you know? What is that statement, you know? The statement contains all the estimated realizable value of assets. Estimated realizable value of assets and estimated realizable value. I mean, estimated amounts to be payable to various parties. I mean, liability holders and shareholders. They need to present. Whom? Board of directors. To whom it should be given? NCLT. When? At the time of applying the petition. Then NCLT will take that case. NCLT will accept for taking such case. Now, all of you please concentrate. Then as per the Companies Act 2013, liquidator will be appointed. Liquidator will be appointed. Liquidator will be appointed. Guys, please all of you bear me for 5 minutes. There is some urgent issue is happening inside. Okay, just all of you please hold for 5 minutes. Just give a 5 minutes. I'll exactly again continue by 8:55. Please all of you hold. Please be in the line only for 5 minutes. Okay. I'm back, sir. I'm back. Actually, I announced I took a 5 minutes break. I announced just a moment. Yeah. Right. We are in live, right? I can continue, right? Yes, sir. Shall we continue? Guys, can you anyone please respond me through chat box? Can I continue? Sorry. Please give a response through chat box, guys. I am back. Can I continue? At least one person. Then I have a confirmation. Through chat box quickly. Just a second. I'm opening my chat box. I'll see your reply. Then I can confirm. Yeah. Okay. Back. Right. I'll continue. Concentrate, guys. So now the liquidator will be appointed as per the provisions of Companies Act 2013. That liquidator will also called as official liquidator only, because which is not a voluntary winding up, which is a compulsory winding up. Now the purview of the Companies Act 2013 is only under the compulsory winding up, so which is known as official liquidator. Once the official liquidator appointed by the NCLT or the NCLT or any other regulator as per Companies Act 2013, then shareholders will lose their entire rights. Board of directors will lose entire their rights and duties. Board of directors will lose their rights and duties. Rights and duties. I mean, board of directors will lose their rights and duties means right now the entire powers and the entire duties are vested with the official liquidator. Now, board of directors will not involve into the affairs of the company. Board of directors will not involve into the operations of the company. They will not touch any of the asset as well as liability. Okay. Once the official liquidator is appointed, official liquidator will take charge of all assets and all liabilities, entire affairs of the business itself. And at that point of time, shareholders are technically known as contributories. Shareholders, we cannot call it as shareholders. We can call it as contributories, because the company is decided to liquidate. Once the company is decided to go for liquidation, then shareholder will become as contributor. Shareholder will become as contributor. Still, he is not a shareholder. Why? Shareholders will also lose their rights. Now, shareholders will be called it as contributories. As per the provisions of Companies Act 2013 only, they will get the money. Okay. Earlier, sir, shareholders will have a right to participate in that meeting, in this meeting. The voting power is different. The dividend is different. Like that, so many issues we read as per the provisions of Companies Act 2013. They lose all such rights. They're acting as a contributories. If they're acting as a shareholder, then they're having such rights. But right now, they're not acting as a shareholder. They're acting as a contributories. Now, one statement is prepared by board of director, they provided to the NCLT, which covers the estimated realizable value of assets and estimated amounts to be make payment to the different liability holders and shareholders. Such statement is ultimately given by NCLT to the liquidator. That means I can put in this way: board of directors will prepare a statement which resembles the estimated realizable value of assets as well as amount payable to different liability holders to hand over to the liquidator. Such statement is particularly known as statement of affairs. Such statement is particularly known as statement of affairs. Statement of affairs. Statement of affairs is a statement which contains estimated realizable value of assets and estimated amounts of liabilities to be made during the process of liquidation. It is prepared by board of directors. Ultimately hand over to liquidator. Ultimately hand over to liquidator. Am I right? Now, the next point is why actually board of directors will give such statement of affairs. Why board of directors will hand over such statement of affairs to liquidator. Altogether, liquidator is an independent person and liquidator is a new person to the company. He may not have good control on the affairs of the company. He don't know what are all different assets available, what are all different liabilities need to make it pay. At which value I need to realize also he don't know. Because the book values of the assets and liabilities in the financials are quite different. Now, board of directors will have good knowledge on the assets and liabilities maintained by the company because they are running the company since past years. They are having good knowledge on the affairs of the entity. They can know at which value we can realize. That's why the estimated realizable value of assets and estimated amounts to be payable to the different parties, which are estimates, not actuals. Such estimates, just they will make it pass on to the liquidator as a reference. Liquidator, based on such statement of affairs, he will start doing actual realizations. Now, the ball is in the court of liquidator. All of you come to the liquidator. Now, liquidator will start realizing assets and will make payment to liability holders. You know, in general course, in case of realizing assets, to realize the liquid assets, liquidator took very less time. Cash is there, already realized. Debtors is there, it took less time. Maybe stock is there. To convert it in the form of cash, where liquidator will require very less time. But building is there. To sell the building, it took much more time. Am I right? Plant and machinery is there. To sell plant and machinery, it took much more time. Factory is there. To sell the factory, it took much more time. That means depending upon the liquidity position of such particular asset, he will start doing the realizing such assets. And will make payment to different liability holders in a particular order. We already seen in case of amalgamation. Now we are discussing the order of making payments to different parties. The order of making payments to different parties during liquidation stage. We are going to see in right now. Concentrate. This is important issue. Most of the times, if you know such order, then only you can have the capability to resolve the problem. What is that order? You know, first, liquidator should incur legal charges first. Legal charges. What is the meaning of legal charges, sir? Maybe we need to submit certain fees to the NCLT. Maybe certain stamp duty you should need to be payable. That is court order, na? So everything, certain legal expenses you may would incur. Then first the liquidator will incur the legal charges. After that, liquidation expenses. I mean, that is nothing but liquidator okay, first let me put like this. He will incur liquidation expenses. Then liquidator remuneration. Sir, what is the meaning of liquidation expenses? Liquidation expenses means maybe the liquidator will give the advertisement. He will call for the quotations to participate in the bidding. He is realizing the assets, right? Okay. So for such all things, he may incur certain expenses, which in general we can call it as liquidation expenses or realization expenses as well. In amalgamation, we already seen liquidation expenses or realization expenses. That is nothing but liquidation expenses. Liquidator remuneration means, sir, liquidator will not offer his services at free of cost. So the ultimate liquidator remuneration is to be payable by whom, sir? Company only. So in the next order, he will put a cash separately for his remuneration. Okay, legal charges, liquidation expenses, liquidator remuneration. After that, we should make payment to preferential creditors. After that, secured creditors with floating charge. Please hold for some time. I will tell you each and everything. Secured creditors with floating charge. Then we will make payment to unsecured creditors. Then we will make payment to preference shareholders. Then we will finally make settlement to equity shareholders. Now, all of you, before discussing these issues, first I will discuss the components of the balance sheet. After that, again come back to this order. So if you want to understand these terms, then first I need to explain this. So just please allow me to explain the other issue. What is that? These are components of balance sheet. Components of balance sheet. So the major items, line items of the balance sheet are, tell me guys, the major line items of balance sheet are assets and liabilities, right? Assets. Here I can put it as liabilities and share capital. That is, I can put it as equity as well. Just I'm writing liabilities and share capital. Assets are broadly categorized into two types. That is, assets not specifically pledged, assets specifically pledged. Shortcuts I am using. Assets not specifically pledged. What it is all about, I will explain. Just hold for some time. Assets specifically pledged, sorry, assets not specifically pledged, and which is assets specifically pledged. Specifically pledged. Then coming to liabilities, sir, liabilities is nothing but we can call it as creditors. We can call it as creditors. Sir, actually creditors includes only trade payables. Here all type of liabilities I am discussing. Okay. The liabilities are the creditors are broadly categorized into two types. Here creditors is there, share capital also there. Creditors are broadly divided into two types. That is, secured creditors, unsecured creditors. Secured creditors are divided into two types again. Secured creditors are secured creditors with fixed charge, secured creditors with floating charge. Unsecured creditors are broadly divided into two types. Preferential creditors, other unsecured creditors. You know, share capital is divided into two types. You know that, equity share capital, preference share capital. Okay, so these are components of balance sheet, and this classification is actually as per statement of affairs. as per statement of affairs. Sir, I not discussed anything about statement of affairs till now. I only discussed one thing. Who prepared the statement of affairs? For which purpose it is prepared? To whom it is ultimately handed over? Board of directors will prepare. For which purpose? For knowing the estimated realizable values of assets and liabilities. To whom it is handed over? To the liquidator it is handed over. And at the time of making petition itself, board of directors should attach the statement of affairs to the NCLT as well. Now, in such statement of affairs, the assets are divided into two types. Assets not specifically pledged, assets specifically pledged. What is the difference, sir? For example, in your books of accounts, what are all the different assets you have? Any asset, do you offer as a security at the time of availing any loan? For example, I took a loan from the SBI by offering inventory. I took a loan from the SBI by offering one of my plant and machinery. Then such assets which are offered as a security, and if you avail the loan, such assets are known as assets specifically pledged. Assets specifically pledged. You know the meaning of pledge. Pledge means you are offering certain asset as a security, you are availing the loan. Such assets are categorized into assets specifically pledged. Remaining all assets are assets not specifically pledged. Assets not specifically pledged means which are free from any lien, which are free from any charge, which are not offered as a security at the time of availing loan. So free from charge and offered as a security. These are assets not specifically pledged and assets specifically pledged. One more thing at this point of time, just I want to clear. The statement of affairs is going to be prepared in different list, guys, different list. So all the assets and liabilities is ultimately make it present in a different list. A and SP is make it present under list A. Assets specifically pledged make it present under list B. How you can remember? Assets which are not offered as a security are A category of assets, list A. So just I am telling for the remembering purpose. Assets which are offered as a security are the B category assets. So A category, list A category is A and SP, list B category is ASP. Okay, next. Coming to the creditors, now out of which security creditor is there, under that security creditor, please come to the fixed charge. Now all of you please observe here. I will give an example for better understanding of the fixed charge. For example, I offered machinery as a security. I offered machinery as a security for availing bank loan. For availing bank loan of rupees 10 lakhs. Now the bank loan is a liability. You can call it as a creditor. It is a security creditor. The bank loan is a security creditor. Now for such bank loan, the security is machinery. The security is machinery. Now we can call it as bank loan is a security creditor with fixed charge. Fixed charge means you are offering a particular asset as a security, an identified asset as a security. Which security you offered, it is clearly known to the lender. That is nothing but fixed charge. Now the bank loan is categorized as fixed charge, security creditors with fixed charge. Do you understand? Such a security creditor with fixed charge is also shown under list B only. Why? You know, the asset related to that loan is under list B, and the related loan should also be there under list B. Now, the asset and the relevant loan, or the loan and the relevant asset offered as a security, both are in the same list, which is nothing but list B. Next, guys, all of you please concentrate. Next, I will go to the preferential creditors, which is list C. After that, I will go to security creditors with floating charge, which is list D. After that, I will go to other unsecured creditors, which is list E. After that, I will go to equity share capital, that is equity shareholders, which is list F. First, I should make payment for preference shareholders. Sorry. Preference shareholders will have a preferential right, guys. List F. If you are making payment to equity shareholders without making to preference shareholders, they will kill you. Actually, preference shareholders are frustrated that much. So because they are only getting the fixed amount of dividend in the past years. So that's why first you should make payment to the preference shareholders, that is list F. Then equity shareholders, which is list G. Now all of you please concentrate. You have a doubt that after realizing first you would realize the assets from assets not specifically pledged or either assets specifically pledged, whatever the case may be. Why? Because there is no particular order in case of realization of assets. But whenever you are realizing assets specifically pledged, then one person will be ready. He will ask such money. Who is that person? Secured creditors with fixed charge. Whenever you are realizing cash from such machinery, then the bank loan, the banker will ask first such amount. Why? Banker will have security on his loan. So the loan is with fixed charged by the machinery. The loan is a fixed charge. The loan is a secured creditor with fixed charge. Whenever you are selling a particular machinery, then first you should make to payment to the relevant liability holder, which is nothing but secured creditors with fixed charge. That's why in the order of preference, first you should make to payment to the secured creditors with fixed charge. Straight away, whenever you are selling an asset, straight away first you should need to make payment to this party. Now cash flows from assets specifically pledged. Just a second. Now cash flows from assets not specifically pledged plus the surplus of cash after making payment to the secured creditors with fixed charge is available for the other parties. One more time I am repeating. Cash flows from ANSP plus the surplus cash after making payment of the relevant liability, that is secured creditors with fixed charge from ASP. Surplus cash from ASP is available for making payment to all other persons. What is such persons? Who are such persons? It will start with legal charges, but there is no special list in the statement of affairs as for legal charges. Then liquidation expenses. Then liquidator remuneration. Then actually you need to make it pay to the secured creditors with floating charge, but Act will give privilege to the one portion of the unsecured creditors who are known as preferential creditors. These are not preference shareholders. These are preferential creditors. Preferential creditors are pure unsecured creditors. Even though such creditors are unsecured, we should make payment before giving payment to secured creditors with floating charge. The reason I will explain you in the relevant sections. I think so. The relevant section is section 327 of Companies Act 2013. We will discuss at later point of time why I should need to make payment to the preferential creditors first before making payment to secured creditors with floating charge. Even though the creditor is a unsecured creditor, preferential creditor is an unsecured creditor, why you are paying or why you are giving a preference than secured creditors with floating charge, I will explain at that point of time. But the order is, the next you should make payment to preferential creditors. Then you should make payment to secured creditors with floating charge. That is the reason why I am giving list C for preferential creditors. After that, I will giving list D to the floating charge. Next, the remaining unsecured creditors, they are not having any preference. After making payment to secured creditors with floating charge only, you should make payment for the other unsecured creditors. That is, I gave list E, that is unsecured creditors is the next payment. Then preference shareholders, then equity shareholders. Now, all of you please understand, please come to here. Now the liquidator will start realizing the assets both from ASP and ANSP. ANSP straight away belongs to hands of the liquidator. Now out of the cash realization from ASP, assets specifically pledged, some portion will be repaid straight away to the secured creditors with fixed charge. then the surplus only taken over by the liquidator. Now in the liquidator hands, assets not specifically pledged plus surplus from assets specifically pledged is in his hands. Am I right? Now all of you please concentrate. Now with the liquidator, he is having cash resources of two types. He is having cash resources of two types. What are such two types of cash resources? That is realizations from assets specifically pledged and realizations from assets not specifically pledged. He is getting cash flow from assets not specifically pledged straight away. These are in the hands of liquidator. Whenever he are realizing cash from assets specifically pledged, he should need to make payment to secured creditors with a fixed charge. That is the reason why I not mentioned fixed charge under the payments. Now, if you made the fixed charge, the surplus balance is also available, which is in the hands of the liquidator. Now, with this balance, he will start repaying the legal charges, liquidation expenses, liquidator remuneration, preferential creditors, secured creditors with floating charge, unsecured creditor, preference shareholders, and equity shareholders. And the statement which is prepared by the liquidator ultimately after making realization of assets and after making settlement to various parties is known as liquidator final statement. Liquidator final statement. This statement known as liquidator final statement. The difference between statement of affairs and liquidator final statement is statement of affairs is prepared by board of directors, which consists of estimated realizable values only. Which consists of statement of affairs will consist of estimated realizable values only. Those are not the real values. And such a statement of affairs is prepared on different lists. That is just now you seen list A, list B, ANSP, ASP. Under secured creditors with fixed charge is also list B. Then preferential creditors list C. Then secured creditors with floating charge list D. Other unsecured creditors list E. Preference share capital list F and equity share capital list G. He will prepare the statement of affairs under different lists. Then on the basis of the information provided by the board of directors to the liquidator, that is as per the statement of affairs, liquidator will start realizing the assets and liabilities. After completion of realization of such assets and liabilities, liquidator will prepare one final statement. It should make it submit to whom, sir? It should make it submit to NCLT ultimately. He should also act in transparent manner, na? That's why what are the different assets I realized, what are the different payments I made in a particular order, he will make it present to the NCLT. Who prepared this liquidator final statement? Liquidator will be prepared. Who prepared? Liquidator. When he will prepared? At the time of realization of assets, at the time of making payment to the different parties. In which order he will make payment, that order also I clearly given. Do you understand? So then, in this chapter, what we are going to discuss, sir. Please all of you concentrate. Now we are seeing the topics we are going to discuss. So no doubt about it, we will discuss about statement of affairs. So once if I put the word statement of affairs here, you know all such things. Who will prepare? Sir, is it estimated realizable values it contains? Actual realizable values contains. In which situation it will be prepared? For which purpose it is prepared? All such facts you know. Apart from this, we will also prepare liquidator final statement. Liquidator final statement. Yes. Who will prepare liquidator final statement? Liquidator. At which point of time he will prepare? After realization of assets and liabilities. In which order we need to make payment? Such all things we already seen. Okay. Apart from this, in liquidator final statement or the statement of affairs, we are using preferential creditors term. Na? What is the meaning of preferential creditors? Before the preferential creditors, we will learn one more thing, which is overriding preferential payments. Overriding preferential payments. And we will see preferential creditors as well. This concept also I'm going to discuss. That is overriding preferential payments and preferential creditors. Sir, what is the meaning of overriding preferential payment? I don't want to discuss at this stage. We will discuss it later. And one more thing, we will discuss the concept of list B contributories. List B contributories. So I can tell these are the major issues of the discussion, guys. These are the major issues of the discussion in this chapter. Statement of affairs, liquidator final statement, overriding preferential payment and preferential creditors, and a list B contributories. These are the issues we are discussing. You know who are known as contributories. The shareholders are known as contributories. Then which type of shareholders are known as list B contributories? Why we are need to learn all such issues we are going to see here. Actually, what we will learn here, liability of list B contributories. Liability of list B contributories we are going to see. Sir, out of all the topics, first which topic we are going to deal, sir? First, we are dealing the liquidator final statement, which is highly important. There is a high materiality to ask such problems in the examination. We will deal the liquidator final statement in the first instant itself. And out of the entire chapter content, almost 80 to 90% content is only related to the liquidator final statement. Now, at the time of learning the liquidator final statement itself, or after learning the liquidator final statement itself, we should go for overriding preferential payments and preferential creditors. This is the order: first, next second, next third. In the last instance, we are going to prepare the statement of affairs, sir, which is not that much of material in examination point of view, because statement of affairs is too much of lengthy and all figures are not actuals, which are estimatable values only. And statement of affairs contains different format as well. The format is completely different. We are need to be present the entire statement of affairs under different lists. We already seen, right? So we will see almost at the end of the chapter things related to statement of affairs, guys. So now the next 2 lectures I'm completely dedicated to the liquidation of companies. If time permits for me, I will consolidate entire 3 chapters theory at the end. I already I'm telling you, if time permits for me, I'm not assuring you. So once if I try to complete the liquidation of companies as soon as possible, if time is still left, then I will summarize the things from the chapter amalgamation to liquidation of companies at the end. Okay, guys. So please, all of you, be prepared for the 2 more lectures. We are going to prepare exclusively these issues, the entire introduction issues, and the basic statement of affairs of different lists, and the order of making payment and basic liquidator of final statement I simply shown in the today's class. And we already seen, sir, in case of different methods of winding up, which provisions are applicable, either Companies Act 2013 or Insolvency and Bankruptcy Code 2016. Also, I discussed Insolvency and Bankruptcy Code 2016, the general provisions, the procedural issues also I discussed. So almost the basic issues are completed. Only the advanced issues, the main content only need to be discussed in this chapter. Okay, we will meet in the next lecture with the main content. Until bye, have a nice day. I will upload the entire classroom notes. You can make it download from the PDF download corner. Bye-bye, guys. Have a nice day.
Recording stopped.